Hello guys, you're welcome to this video. In this video we are going to be talking about how to use the ADX DMI indicator. So basically we are going to be examining a strategy where the ADX DMI indicator gives us the signals and we open our trades based on the signals generated by the indicator. So some key points to note is that the ADX DMI indicator works with the principle of crossovers. Now you can see that there are two lines. This is the indicator window. You can see that there are two lines. These two lines are together. They are together representing the ADX DMI indicator. Now the crossover means when the green line crosses over the yellow line upwards or downwards. Whenever the green line crosses over the yellow line upwards, it indicates a buy signal. On the other hand, whenever the green line crosses over the yellow line downwards, it indicates a sell signal. So how does this strategy work? Now, when you are looking for a buy trade, all you have to do is you wait for a bullish crossover. A bullish crossover occurs when the green line crosses above the yellow line upwards, and as you can see, right after the crossover happened, the price of the asset went up. Now, when you enter a buy trade, the ideal thing to do is to set a stop loss and to set a take profit. But if you prefer to watch your charts until the price gets to your desired price target, then you can decide to exit your trade below the swing low, or you just set a stop loss so that the broker automatically closes the trade for you when it gets there. You can decide to set your stop loss below the swing low or below the nearest support level. And as we can see that there is a support level here, it even coincides with the swing low. So we would have considered setting a stop loss just below this swing low, just below this support level. And then for our take profits, we can use the opposing signal from the indicator to determine our exit signal. Now, the exit signal for a buy trade is going to mean when the green line crosses over the yellow line downwards. And as we can see that happened around here, right? That happened around here, meaning we would have exited our trade somewhere around here. But if you prefer to set your take profit so that the broker can close the trade automatically for you, then we can consider setting take profit at the nearest resistance level. And the nearest resistance level is going to be here. You can see that there was multiple touches. You can see that there were multiple touches around here, multiple rejections. So this is our nearest resistance level from our entry point. So if you want to set your stop loss and take profit levels without needing to be on your charts, then this will be a good position for your stop loss below the swing low. The nearest resistance level is going to be a good position for your take profit. However, if you prefer to watch your charts and close your trades manually, then you can just watch out for when price breaks the nearest support to exit your buy trade in a little loss. Or you can decide to wait for the opposing signal from the indicator. The opposing signal meaning when the green line crosses over the yellow line downwards, it shows that a sell move is about to happen. Then you can exit your buy trade. Or you can also use other indicators to confirm your exits as well. Now, as for a sell trade, it is just the opposite of the buy trade, right? As for the sell trade, all you need to do is watch out for a bearish crossover. Now, let us look for a few examples. You can see that after the green line crossed over the yellow line downwards around here, you can see that just right after that crossover, the asset sold. Now, where do you set your stop loss? The same technique. Above the swing high, for a sell trade, your stop loss can be set above the swing high or above the nearest resistance level. If you have any resistance level near to that point, but in this situation, we can see this is the 1 hour chart. We can see that there is no resistance level to identify at this point, so we can just set our stop loss above the swing high, and then the take profit can be set at the nearest support level, and our nearest support level would have been somewhere around here. Remember that when a resistance is broken, the resistance turns into a support. So this line was representing a resistance, and right after it was broken, it turned into a support. So we would have considered setting a stop loss above here for our sell trade, and then a take profit perhaps around this zone, right? Or we would have waited for an opposing signal from the indicator, and that opposing signal is going to mean when the green line crosses above the yellow line, and that happens somewhere around here. So we would have exited this trade somewhere around here. That is, if we had waited for a signal from the indicator, then we would have exited somewhere around here, right? However, if we had set our stop loss above here and take profit at the support, then our trade would have closed somewhere around here when the price of the asset got to the support level. So basically, this is how this strategy works. It is a strategy that is based on the principle of crossovers. When the green line crosses above the yellow line, it is a buy signal, and when the green line crosses below the yellow line, it is a sell signal. Always make sure that you observe good risk management. Do not trade with any money that you cannot afford to lose, okay? And make sure that you employ good risk to reward ratio, so that your trades can eventually be good. Because if you have a series of good trades and maybe a few bad trades, if you do not observe good risk to reward ratio, you might find out that the number of trades that did not go well might cost you more than the amount you make when your trades go well. So risk to reward ratio can be 1 to 2, can be 1 to 3, can be 1 to, depending on the kind of trader you are. Some traders prefer using risk to reward ratios of 1 to 2, meaning if you are risking $1, you want to make $2. If you are risking $2, you want to make $4. But it depends on the price action at that point, because sometimes you might not see the price of the asset get to the target that you are imagining. So first and foremost, it is good for you to calculate your risk to reward ratio before you even enter the trade. For example, if we want to enter a buy trade around here and we want to risk $10, $10 should be our risk, $20 should be our profit target, right? That is going to give us a risk to reward ratio of 1 to 2. Now, if we check the ideal place to set our stop loss, which is going to be below this point, that means our risking $10 is going to be somewhere. Let's say we enter the buy trade here. That is, from here to here is going to be a risk of $10. Then our $20 should be not above the resistance zone, because if your profit target for a buy trade exceeds the resistance zone, there is a possibility that price might not get to your profit target. So it is important that even when observing your um, risk management, you also should have realistic targets, right? If you want to enter a buy trade and you notice that your profit target exceeds the nearest resistance level, then you can either decide to ignore that trade, or you can decide to reduce your risk to reward ratio. But it is not good, usually it is not good for risk to reward ratio to be 1 to 1, meaning if you are risking $1, you are aiming to make $1. It is not usually good, because profit is not guaranteed. And if profit is not guaranteed, it means sometimes you are going to encounter losses. And when you encounter losses, if your risk to reward ratio has not been good, you might find out that you will lose more than you have made. So normally when you are entering your trades, try as much as possible to see that your profit target always exceeds your risk. Try as much as possible. If your profit target does not exceed your risk, then it is advisable that you do not pick the trade. So that is all for now. I hope you found this video insightful. If you did, don't forget to hit the notification bell, like, and subscribe for more. Cheers, guys, and happy trading.